Yeah, I don't say you glossed over it, but maybe for people that aren't fully in tune with some of the tax code, um, we probably need to be a little bit more specific. So you mentioned oil and gas, and I'm going to talk about that a little bit. So an oil and gas strategy that we use as part of the ERT group, excuse me, is a deduction. So let's say you put $100,000 into an oil and gas investment. The number is you get about a 93% or a $93,000 loss or deduction on your taxes. And so that reduces your ordinary income. But with the solar, you're talking about tax credits. So why don't you go into the difference between, so the deduction just reduces your income. You're still paying taxes, but what you said was a dollar for dollar exchange. Instead of paying money to Uncle Sam, $1 or $100,000, you're buying $100,000 worth of solar assets. Is that correct?
That's correct. So if I use that same analogy, and I just want to be clear, I think both are great investments, but one is really a tax efficient investment. The way I understand the ones I've looked at with oil and gas, where yes, you get that depreciation deduction, right? If I own a well, and that's great, but I'm investing in that well because I believe it's going to give me a cash on cash return. So if I make 100 grand, that deduction of, let's say 90,000, whatever the number may be, that means that I just pay less in taxes on my overall gains. Great strategy. Love it. Here, this is not about making an investment that then will lower your overall tax obligation on your gains. This is literally taking money after I've done oil and gas and any of these other really nice tax efficient strategies. If I'm left with a tax bill, which most people are, then here's where we can come in and shave the difference. And so what's lovely about our strategy is that it's a complement to anything else people are doing out there. It can sit in a sidecar, right? And just go right in parallel. And the way that works is and I'm going to speak in broad terms just so your audience really understands, you have a tax obligation to the IRS. So you could instead redirect those tax dollars. So my wife is an executive and she has a W-2, and we've changed the withholdings on her W-4. So there's very little taxes coming out of her paycheck. And now we have this surplus of cash that we didn't have before, right? So it was going to the IRS. We keep that in the family treasury, and we use that to buy our solar systems every single month. I used to pay my taxes because all of my income's through K1. I'd pay it quarterly. I stopped paying quarterly because I didn't need to anymore based on guidance from my CPA. And I simply used that same money that was earmarked to pay those taxes and instead used them to buy our assets. So for our household, there was no impact to our cash flow. Okay. It is a straight redirection of those tax dollars. So let's just keep the math easy. Let's say that I'm going to otherwise owe $100,000 per my household to the IRS. We just redirect that into buying these assets. And then when we file our taxes, again, speaking broadly, we get a $100,000 tax credit. Now, your audience may be thinking, okay, but you're really just pari passu at that point, right? You're net zero. Correct. But what you're getting when you buy these assets is you're getting all of this depreciation benefits as well. And so that depreciation benefit, as you mentioned with oil and gas, is going to be a deduction from all other forms of income, right? So you're going to take your AGI and reduce that down. And we know for every dollar you can reduce income on paper for reporting of taxes. If you're in a 37% tax bracket, and if you're unfortunate to be in California paying 13 or 14% like I do, you're saving 50 cents on every dollar. Yeah. So the real power of the strategy is leverage the tax credit to buy the assets. And what you're really buying with those assets and value is all of this depreciation deductions that are going to save even more on your taxes.
Right. And so over the lifespan, so you mentioned you can, at the end of 6 years, you can either sell this asset or you can continue to use the asset. Which do you do? Since you're an expert in this area and keep doing this year after year, month after month?
Yeah, it's a great question. So there are various forms of financing for solar energy. I want to be explicit about that. And so our specific, what I'll call our bread and butter product, is what's called a prepaid power purchase agreement. And a power purchase agreement is simply a property owner, whether it's a residential home or say a small business owner, they want to pay for solar electricity. they have decided for various reasons that they don't need to own the physical equipment on the roof. They just want to buy the power. And so there's a power purchase agreement where that property owner could just pay every single month based on the electricity that's generated. There's another form, which is ours, which is called prepaid. And instead of that property owner paying each month, they're going to pay for all 20 years of electricity up front. Now, the whole audience is probably wondering, why would anyone ever want to pay for 20 years of power up front? There's a variety of reasons, but the most simplest answer is it's the single lowest cost option to acquire electricity, not just solar electricity, any form of electricity. So that property owner is incentivized with a large discount on their power. So most of the property owners we're talking to are very sophisticated, and they see this as the most economical way to get electricity for their home. So they prepay all 20 years of power payments up front. What that means is that we then take that income, okay, from that property owner and the power purchase agreement that they signed, and we simply assign that to our clients who end up buying that asset. And so that income is assigned to the LLC that owns the asset along with that contract. Now, we don't actually have to send the actual money into the bank account of our client. That's going to be done through bookkeeping with the CPA, and the IRS allows that. But we're going to take that upfront money and we're going to use that to pay the contractor who's doing the installation. So speaking broadly, the prepayment that the property owners are making is roughly 2/3, Stuart, of the total cost of the asset. And so that other 1/3 is coming from our clients who are just redirecting their tax dollars. So that's important to explain because I'm going to answer your question now about year 6. In the 6th year, per this agreement that the property owner signed, they can buy the solar system back from the owner. So I'm going to put myself in the shoes of the owner as I am. If the property owner wants to buy that solar system back from me, we're going to do a fair market value assessment, and we're going to negotiate that for me and all of our clients, and we're going to broker that transaction. What we tell all of our clients is assume that you're going to sell it back to that property owner for $1. And the reason I'm using $1 is that's a plug. That's the lowest cost we would ever sell it back for. And that's actually very symbiotic because the property owner paid all that money up front plus $1. Now they own it. And I've been able to save considerable money on my taxes. Great arrangement. Now, back to your question. There are going to be some owners that elect not to buy it. And so if they do not buy it back from me, they'll start paying me every single year for maintenance and administrative fees. Now, it's a very nominal fee of roughly, let's call it $300 approximately per household. And my cost to Inception Financial is only about $100 a year per asset. And so I would net roughly $200 per year for every asset I own. Well, if you only own 1 or 2 assets, that's not moving the needle. But like my wife and I own hundreds of these. So it's very accretive. And that's each year we do this, we will receive that type of cash flow year over year. So to answer your question, I hope that the vast majority, if not all, of my property owners elect not to buy it, because every single dollar that I make in cash over zero is just more value to my household because I didn't really have to use any of my household money for this. I just redirected tax dollars. So I'm happy to eke out every single dollar I can because it's going to be accretive and I already own these assets. Now, if I was only going to do this one time ever, let's say someone had a big exit and they're maybe not going to have much income over the next 5 years, then maybe they would hope that every one of their property owners just elects to buy it. But the good news is Inception Financial will find a buyer to help if there's a client who does not want to own these assets after that 6th year. So I know that was a mouthful, but it's a difficult question because there's a lot of nuance there.
Yeah. So, you know, I've seen this strategy being presented to me several times. I've looked at it. When you just went over it, sounds super complicated. We will have, and you do have, explainer videos. We're going to put those explainer videos in the bio below, so you'll be able to review it. Actually, you have diagrams so you can see how the money and cash flow moves in and out. But again, it does sound super complicated. And from a particular investor, you might be thinking right now, oh my God, like real estate, like running a restaurant, there's a lot of work I've got to do, but that's not the case. That's where you guys come in, right?
That's correct. So this has specifically been designed so that the owner of the LLC, the clients who are listening today, they can participate in the business, but it requires maybe, a handful of hours a week. That's it. And in doing so, they're able to claim active status in the business, and therefore they can use all of the depreciation and the credits against all forms of income. So this can work active or passive. If for some reason we have a client that is not interested in participating at all, then they can use this strategy just to offset passive. But the vast majority of our clients, they don't mind putting in a handful of hours every week, reading contracts, looking on the portal, looking at the investment, doing their due diligence. And we have the business template that makes this business a very low touch business. But what our clients are doing is essentially setting up a small company. And that small company is now a solar electricity provider, providing electricity to households all across the United States. And we have the template to show everybody how to do it. And we're right there to ensure that the most important aspect of the business, which is the technical side, ensuring that the electricity is being delivered, along with having all the necessary insurance in place, we manage all of that for our clients. So it's a low touch business.
Yeah. Well,